Hello everyone, today is April 20th and this is Wyckoff Trading Course Part 2, the practicum. Today is the first class of the new cycle. I'm very excited, especially with the practicum, just because you guys are graduates of the WTC1, so I'm looking forward to continue education with you and kind of, to know you a little bit better. Because during the WTC1, where I'm giving you the initial foundational knowledge, I know you through your homeworks, through some of the interactions that we have over the email. But here in this class, I'm going to really kind of like figure out who you are as a trader, because our homeworks are going to be a lot about practice. So I'm going to see a lot of the things that you do correctly or incorrectly. So it's going to be crucial for us in this class to work on your homeworks. And this is going to be a part of the overall structure of the class, of the overall structure of the course. So please make sure that you are going to submit the homeworks. And I'm addressing the students right now, like who is in this class, but also we have some guests today. This is the first class, so open doors. And welcome to the practicum. Even though you will not be able to sign up for this class if you are not the graduate of WTC1, I still would like you to stick around and to kind of like go through our regular class routine where we are, where we talk about the market, where we go through the exercises, where we go through the homeworks. So I'm going to try to make it as close to the actual version of the class as possible so that you would know and would consider taking WTC1 class as a beginning class. For those of you who are thinking about signing up, so don't forget, it's 12 sessions course, not 15. So usual question is, what's the difference? Well, for WTC2, the difference is very minimal. I'm still going to give you some of the information, some of the knowledge, but predominantly we're just going to practice. So the only big difference is that we are probably going to practice somewhat less, right? 3 sessions less. So that's the only difference. And then I know also that in this group we have quite a few alumni. So for you guys, we have an alumni rate to encourage you to come back and to practice more. Hopefully you're going to sign up. I've seen quite a few WTC2 alumni are signing up already, and I'm really looking forward to working with you. Don't forget about our payment plan. You don't have to pay the whole amount right away. You could just spread it out. So contact Nancy at wyckofassociates@gmail.com, and she'll help you out to set up everything. As usual, all of our classes are going to be interactive classes. So therefore, I would like to make sure that you have a built-in microphone if you would like to interact with me during the session, if opportunity arises. Also, same rules for WTC2 class for the homework submission, one file, PowerPoint, PDF, or Word doc. And obviously, I still would like you to put the title in with your first name, the name of the class, and then the number of the homework. This recording will be available to everybody. We're going to post it on YouTube, but the slides are only going to be available to paid students, and you will have the access to those as usual on our class page on our website behind the password wall tonight, probably by around 8 p.m. Pacific. All right, as usual, everything that we discuss in our classes is for educational purposes only, so stop the recording and read the disclaimer in full. For those of you who are new to Wyckoff Analytics, check out our weekly newsletter. That is free. Usually we'll have some kind of market update. We'll have our latest videos for you, and we'll have our latest blogs. Also, any type of announcements, administrative announcement about any classes, you will see there. Check out our YouTube channel. I know that a lot of you already did. We are posting videos regularly on the weekly basis, and you could go through quite a few of them on our YouTube channel. So check it out. Our Twitter is also very helpful. I consider Twitter an educational tool, so we put quite a few educational material there, including the bias game, which we will go through today. So check this out as well. All right, let's talk about the curriculum for this class. So 12 sessions, as I said. What are the main big blocks of knowledge or skill building that we're going to go through? Well, for us, the application of the knowledge that we've received in WTC1 is going to be of utmost importance. So drills and exercises, this is what we're going to concentrate on. Our predominant skill building is going to be around the bias and timing. But having said this, the character with which the price moves is going to be extremely important as well. We will talk a lot about trading tactics and management, specifically developing different price structural scenarios. How do we manage the trade? How do we manage the risk? And so on and so forth. In the advanced Wyckoff studies, we'll talk about the trends a lot. We'll talk about different phase behaviors. I routinely bring you, some kind of historical examples. There will be some insights into how we could use some of the modern TA tools. It usually comes up with students. They send me something and then I show them something else. So we'll do that for sure. Okay. Today, we're going through the introduction right now. We'll discuss the homeworks, market update. Then we'll do kind of like a very general observations and deductions exercise. This is just to make a point of where we are, first of all, for students who are taking this class. Secondly, for guests, just to maybe like pose a question. Are you doing this correctly or not? Are you seeing what you're supposed to see? Is there something else that you need to develop, either observationally or in terms of your deductive reasoning? Then we're going to go through the review of the bias game number 92. This is kind of like a pretty standard routine for us in this class. We go into a lot of depth analyzing the chart, so this is going to be a really good example for you guys, for those of you who are a guest at this class. Anatomy of the trade, I'm going to discuss some of my trades, whether they are past trades or the current trades. So we're going to discuss some trades in cryptos and then some trades in Twitter. For the next class, guys, and this is where we go into the homework, and this is where I'm talking to students who already signed up or who's going to sign up. You're going to have quite a lot of assignments for this week. Well, your first assignment is to read 2 articles. One is actually a chapter from the Outliers book by Malcolm Gladwell, and I'm sure a lot of you know this. So we're gonna post the article for you on the class page. So I want you to read that, and it's called 10,000 Hours, and you already kind of could sense where we're going with that. We need to spend a considerable amount of hours of repetition as we are trying to build the skill on the knowledge that we have received in WTC1. And that's going to be the main message. And then the second article, which is an article, is called The Mundanity of Excellence. It's about Olympic trial swimmers and how they differentiate in their preparation. So a qualitative approach to a high number of repetitions is going to be crucial for us. So I want you to read both articles, and we're going to have a little bit of the discussion next time. I'm going to volunteer somebody, and we'll talk about, their trading and so on and so forth from both perspectives, quantitative and qualitative. Then after that, I'm going to give you today bias game number 93. It's not on Twitter yet, right? So we'll talk about different sources for the bias game, where you could find it. And actually, I'll have the whole assignment for you over the duration of the course, to do, to go through the bias games. And we'll talk about in the second class how I want you to do this. There is a specific way. But for now, for next week, I just want you to take this bias game 93. It's going to be posted as a homework on the class page. And without looking at the solution that comes out on Friday, solve it. And whatever your bias game decision was, I want you to send it to me as the homework, right? And then on Friday, you could look at the solution. But, obviously, we don't want to go into the situation where we are cheating, right? Why? Because you're kind of going to shoot yourself in your own foot. So don't do that. Stay, true to the level of where you are. I want to see where you are with the bias game. It's going to be a really good indication for me where you are. So please make sure that you do this correctly. And then our third assignment is going to be to think about one stock that you want the whole class to trade during this semester. And granted, we only have 12 weeks, not 15. That's fine. The key is just the discussion or discussions that we're going to have each class about a specific stock. So please make sure that you have one stock in mind, and then during the second class, we're going to, as a class, we're going to decide which stock we're going to follow. And then all of you, as a home assignment, are going to do your analysis on the weekly basis. Okay, I think this is it, right? So mundanity of excellence and the outliers articles are going to be posted together with the video and the slides on the class page. This session is being recorded for those of you who cannot, go through the whole session. We're going to post it on Wyckoff Trading Method YouTube channel tonight. For students, you don't have to worry about this. You will receive an access to the class page with the same recording. So it's all going to be there. Okay, let's do the market update. And we're going to start with Bitcoin. This is what I did yesterday with the WTC1 class. So I want to start it here again. So we had a mini shakeout in Bitcoin, and that happened over the weekend. And usually over the weekend, liquidity is very low. So it's not uncommon that we're gonna, have some kind of shakeout action. By the way, for those of you who are interested in cryptos or you're trading cryptos, check out our Discord group on cryptos. That's number one. Secondly, check out just a fantastic work by Alessio, our crypto expert, who is, in my opinion, he's kind of like, transforming the Wyckoff analysis and putting it in terms of the characteristics of the crypto market. So really, really fantastic work by Alessio, and check this out. So let's come back to this particular bar. This is a shakeout type of bar. Why is this a shakeout type of bar? Well, first of all, we need to think about characteristics of this bar. And usually characteristics of the shakeout, either bar or shakeout as a price action, are going to be as follows. Volume is going to increase, and it's going to be usually a spike. And with that, we would suspect that supply is increasing as well. Now, behind that increase in the volume signature, also, because this is a shakeout or a potential shakeout, we would be thinking that demand is increasing as well. And this is a very important point, because we want to understand when demand comes in, it stops the price from moving further down. But at that moment, we still don't have a confirmation that that was a successful stop in action. The price could rally, it could consolidate for some time, and then it can fail. So we really need to understand that after the shakeout, we need to have some kind of test. And this test is going to determine what's going to happen next. So we'll talk about the test in a second. What are the characteristics that we would see during the shakeout type of action? The downward spread is going to be increasing, or the downward swing of the shakeout is going to be increasing. And usually that would bring some kind of commitment to the downside. The best shakeouts that are showing some kind of demand price action are going to have demand tails. And this is exactly what we're seeing on this chart. So that would tell us that demand is capable of pushing on a intraday basis the price up into the close. And that's obviously a bullish action. We also want to understand the result of the shakeout. I mentioned, this kind of like this demand tail recovery that brings us back above the support level. And also we need to understand what kind of support levels were violated, right? How many? So what kind plus how many? And obviously, the more support levels were violated and not recovered to almost instantaneously, the more bearish the picture is. In some instances, a shakeout is going to be compared, and it looks somewhat similar, could look somewhat similar to a sign of weakness. So what's the biggest difference, right, between two? We're going to have shakeout recover back into the trading range, whereas sign of weakness is going to produce last point of supply rally, which is going to be weak characteristically. And it's also going to produce a diminishing upward result. And those are very two important points. As we usually would say, okay, looks bearish acts bullish, or looks bullish acts bearish. That's kind of like that type of statement that we've coined in this class. Sometimes shakeouts are going to look extremely bearish. So you have to concentrate on the result, either on the immediate result of the shakeout itself or what comes after. So now that we've talked about the shakeouts and main characteristics, main result characteristics, comparisons to the sign of weakness, let's talk about what comes next after the potential shakeout. So if this is a shakeout, and this looks in the construct of the structure, it looks even not necessarily like a very deep shakeout, right? Because if we are looking at this trading range, and look how nicely we have, all of the points here coinciding with the support and the resistance, even this one right here, we do not have the commitment to the downside. So one might argue that, this could have been just a spring, but the volume signature is still a little bit too much. So we would be still thinking about the shakeout. So what comes next after the shakeout? We want to understand what kind of testing action we're going to have. And we're seeing that there was an attempt to go down again. How does that look to you guys? Does this look more bearish or more bullish? If it would be more bearish, we probably would have the bar that kind of extends into the low of the shakeout bar, right? So that would tell us that still some, selling producing the result to the downside, and now the close is even lower than the shakeout close. And we probably would still have relatively high volume signature. So I would say more than average. And we just don't have those two characteristics. We have instead a close which is at the same level as the shakeout close. We don't have any intraday extension to the downside, which is somewhat suspicious. And then the volume signature shows that there is a supply, but it's not a very significant supply. All right, well, what comes next? Because tests are not necessarily just one bar. Tests are, could be multiple bars or a series of bars and could be a trading range on its own. So today's bar is very positive. Why would we say so, by the way, guys? What do you guys think? So type it in the questions box, and I'll go through some of your answers. Why do we think that today's bar was a positive bar for the test? Test to the downside and recovery above the open, Steve is saying. Yes, great. All right. So on the intraday basis, if we look at the shakeout, so shakeout acts kind of like this. So here's recovery into the close of the shakeout. Then the next day, we might be thinking, okay, maybe there is some continuation of the momentum to the upside, attempt to go down, and then we kind of close almost at the same level, slightly lower. Then the next day, we're opening at the same level, trying to go down, going below the low of the previous day, and then recovering up and closing higher than the previous close. So we have some kind of attempt to go down, failure to the down follow through, and then we're closing positively, right? So close is positive, and that's what I think Steve is describing. Okay, let's see some other answers. Jonah is saying consuming supply on the way up. Yeah, this is a really good statement because we're looking at the volume signature. First of all, this is probably one of the highest demand signatures in a while, right? So we probably would be thinking about like, okay, this, this has both supply and demand. This one right here is much more pure demand than anywhere else. What else? Everything else is kind of supply and demand right there. So we're seeing that even though supply is coming in, and maybe it's even increasing over the previous bar, what we're seeing is that demand is increasing as well. And when we think about this type of volume character, we always have to think, what does it produce? What is the result of this supply and demand increase? And we're seeing that the result is much more positive, right? So recovery, intraday recovery into the close, closes above the two closes of the previous 2 days, including the shakeout day, and the spread is increasing in the direction of the upward movement. So the whole idea that there is no follow through to the downside after a bearish looking price action, combined together with the presence of the demand that is increasing, suggests absorption. Is it possible that we might fail from this? I think it is, but we definitely would have to kind of have more price action that doesn't lead to the new highs, and specifically, overcoming this level at 59,000. So that would be not that constructive. It would tell us that demand is somewhat exhausted after initial attempts of absorption and testing. But we will have to see whether this is going to happen or not. And then obviously the most bullish scenario is that we just kind of recover really quickly back to about 62, 65. That would suggest a bullish continuation almost immediately. Okay, let's see what else. you guys are saying? Hamid is saying, okay, demand tail. Scott is saying demand tail, close near previous close. Yes. Long tail from Anthony. Yes. Higher high from Alistair. Demand tail from Scott. Closes. Demand increase from Modu. More supply, but close high from Mike. Anthony says close above previous day. Negates the previous bars from Bernard. And then Amida saying bigger picture, more effort, but less result with respect to their spike supply bar. I like all of this. You guys are definitely on the right track here, in my opinion. So looking at what Hamid said at the end, this is the largest volume signature here. So volume has increased a lot. So with that, we're going to say that effort to push the price down was the largest attempt to push that price down. What did it accomplish? I mean, even with the test that we're seeing. I mean, if there is so much effort to push the price down, what was really accomplished by this price action? Probably not a lot. And Dominic is saying, could we call this point of fear number 2? Yeah, for sure. So we'll go to this in a second. That increase in the downward effort was the result that is somewhat limited. And it's somewhat reminiscent of the change of behavior that we have experienced in the prior trading ranges. And specifically, this first two, let's just even not take this one into the account, but this 1, 2, and then 3. So we're seeing how quickly we could recover from this. And this is on the change of behavior. We already had a change of behavior in this trading range. It's right here. So this indeed acts more as a second point of fear where weak hands capitulate their positions. So I was trying to find the evidence of this weak hands capitulation. And I think I found, a couple of articles that, talked about over 1 million accounts that are leveraged accounts were triggered and their positions were closed. So you can imagine the severity of this shakeout action because people were leveraged into the rally that started losing, its demand characteristics. Look at the volume signature just in general. We are seeing such a quick capitulation where they just forced out of the position. And I think that probably what was happening on the background of the fundamental news that are coming from China and so on and so forth. You could read about that yourself. So a pretty interesting spot where sentiment from bullish goes to quickly bearish. And usually these type of spots are really great opportunities for big institutions to buy more. And as they buy more, they absorb more. And as they absorb more supply is in strong hands, and that assures that continuation of the uptrend is going to be there for us. So we'll still have to see what's going to happen. Let's talk scenarios right now, right? So what kind of potential scenarios we could have? Let's start with the most bullish scenario. So the most bullish scenario, how would it look like? Well, probably just almost instant recovery, right? So recovery over this bar, then continuation to the resistance level. And just because we absorb more supply in this area, could we overcome 65, maybe hit 70 or 71, and then have some short-term reaction and continue to the upside? So this is the most bullish scenario. The second bullish scenario will be continuation of the absorption at kind of like this mid of the range action. second most bullish. And then another bullish scenario, I'm going to give you 4, is a scenario where we're trying to consolidate, but with a lot of weakness, and the price still drops to this level right here to about 42, and then we recover from there. So number 3. And then obviously still bullish, but now most bearish out of all of these bullish scenarios, scenario number 4. So why am I doing this? And somebody might say like, well, how do you know what's going to happen? That's the point. You don't. If you think that you know what's going to happen, you are not a trader, because you do not understand that the market is the place of uncertainty, and you should be trading the probabilities rather than just some kind of prediction of yours. So therefore, what we're doing with our understanding of the Wyckoff methodology is we're trying to understand what is the long-term trend. That's number 1. Then we want to understand what kind of scenarios, both bullish and bearish, could happen. And then thirdly, we seek confirmations of those scenarios. And then we trade. We trade those. So that's kind of a logical mental sequence that we're going to go through. And obviously behind, let's say development of the scenarios is a lot of thought on the Wyckoff structure itself, right? Because we would be thinking in scenario number 1 that this is still a reaccumulation with phase C. Scenario number 2, the same thing. Scenario number 3, phase C moves to the low, and then scenario number 4, again, phase C moves. So we need to understand this in order for us to initiate positions at the specific spots. So for instance, right here after the confirmation, right here after the confirmation, right here after the confirmation, or right here after the confirmation. So we still want to be pretty early in the next move up if it happens. But we also want to understand that whatever bearishness came over the weekend with a lot of supply, a lot of bearish looking bars, that we're not jumping on them right away. I mean, we could open some kind of probe position that is acceptable if you have a more advanced skill recognition. But for the beginner and intermediate trader, I want to push you into action, test, and then confirmation. So buy confirmation where there is a high probability of the continuation. And then obviously we're not talking here about bearish scenarios, but I want you to think about this as well on your own. So if we're just discussing bullish scenarios, because we still don't see distributional signs here per se yet. So once those start to occur, then we'll start developing bearish scenarios. And what this does, as we understand Wyckoffian structure, as we understand the the tapering behind it, as we understand where and how confirmations should look like, we definitely are giving ourselves a really good chance to succeed if one of those scenarios are going to unfold. And what happens as one of them unfolds is that in your mind, you're already prepared to all 4 of the scenarios. And your mind is just basically asking a question. Well, would the market show me exactly which scenario is unfolding? And I'm going to act according to that scenario. And if we are acting according to that market scenario, then we are in harmony with the market. And that's the whole idea behind trading in the harmony with the market. So no predictions in this class. I'm sorry to disappoint you guys. For those of you who are kind of seeking, like, I want to know everything 100%. I'm going to disappoint you again. There is no such thing. You might be periodically be extremely correct. I've had a lot of those moments throughout, more than 25 years of my career trading. I've had, my longest streak of winning trades was at 22. That was intraday trading, by the way. I just want to specify that. Just recently, like before this February decline, I remember the moment where out of like 50 positions that I had open, 47 were profitable. So you go to those places, obviously, you have those. But the key there, if you start thinking like, oh my gosh, I'm really good. Oh, this is a very dangerous spot. So make sure that when you think this way, you journal and you reflect in the journal of all of your thoughts, and then you realize that this is your ego talking. And the reason why I talk about this is because, there is a sequence from knowledge to mechanics of trading to the mindset, to the process, to the mindset, and so on and so forth. And I don't want you just to see or understand that this class is just about the mechanics. Obviously 99% of it is going to be this, but then I'm going to deviate and do this type of side notes. All right, let's move on. Actually, a question here: are the strong hands taken from the weekends? From Scott. Yeah, I would be thinking this way. And my thinking here, Scott, is that with Bitcoin, a lot of the companies are recognizing that the crypto space, and specifically digital currency, is going to be the future. And it's not just going to be cryptos. I think that majority of the countries are going to digitize their currency. We're basically not going to have paper money like in 10 years, I think. And a lot of the companies understand that they need to get on this trend as early as possible. So like Elon Musk buying, 1.5 billion of Bitcoin is an example of that. And I don't think that majority of the companies are still there. So we're still pretty much in the long-term uptrend for Bitcoin. That's my opinion. I think that this year we definitely should hit 100,000. That's been my call, since the beginning of the year. And it's just kind of a near-term future for all of us. So therefore, yes, strong hands, institutional hands, are trying to get as much as possible in the points of liquidity where we can't capitulate their positions, like it happened over the weekend. And again, it's all about confirmation, right? We still need to see, would we confirm this action? If tomorrow a ball like this comes, how would we interpret this? We would say that the weakness still persists. And then we will be thinking about other scenarios, right? Okay, so what about this scenario, right? Or what about this scenario? Still bullish within the context of a very, very long-term trend, but short-term bearish just based on how this bar develops. Okay, another question. Why can't we consider the upslope in range as distribution and the last drop as a sign of weakness from my chart? Okay, yeah, it's a really good question. And these are the type of questions that I want you guys to ask during these classes, right? And as as usual, we do. So a sign of weakness needs to commit below a support level, right? So we need to see some kind of more pronounced commitment to the downside. That's number one. Secondly, we need to commit with some of the progressive closes to the downside. Thirdly, we need to try to recover with the weak last point of supply rally. And fourthly, we need to break to the downside as a confirmation. So these are the elements of the sign of weakness, and we don't see it here. So far, it acts as a sign of weakness. It looks as a sign of weakness, but it acts more bullishly than the sign of weakness would do so. Okay, last question, and then we're gonna move on. do you see Coinbase as a positive long-term influence to Bitcoin and other cryptos? I think so, for sure. I mean, I don't know. Coinbase does not have enough data for me to make any type of, meaningful long-term predictions. Although you might be thinking that yes, if the cryptos are gonna go higher, then Coinbase obviously is gonna go higher. Um, Somebody brought to my attention the correlation between Coinbase and Bitcoin right now, which is very interesting. I want to look into that. And if indeed we're going to have more data and that correlation is going to still stay, this could be a really interesting indicator for us, to use. So I'm looking forward to trading Coinbase when, not necessarily on the intraday basis, but when it starts to consolidate and when we're going to see more of the institutional types getting in. All right, let's talk about Nasdaq. This is the tape reading exercise for us. So we've seen quite a lot of buying and selling throughout the whole structure. So let's just really quickly go through those. We're seeing the selling at the beginning of September, and that selling is all related to the rotation from growth to value. And as the price goes down, what's very important, the buying comes in right away. Why would we say that the buying comes in right away? Well, we're seeing how this second bar has the tail. So it's this shakeout type of tail, right, that we've seen in Bitcoin, where demand comes in and on the intraday basis pulls up the price into the close. So, and that happens on the increased volume signature. So behind the increase of the supply, there is increase of the demand. An increase of the demand always going to do what? Forewarn us of the stopping action of the downtrend, forewarn us of the change of behavior and potential trading range. The next bar, still relatively high volume signature, but the close relative to the previous low extends just a little bit. So that just tells us that there is still some presence of demand and we might seek some kind of potential stopping action, which comes on the bar after that. This green bar covers a lot of the body of the previous red bar. The volume signature is relatively high again, so demand is obviously present in that space, in this spot. So we know that we are in some kind of trade range at that point of time. Rallies are not that great, but the next decline again has 1, 2, 3 bars with the demand tails, and we're seeing how supply generally just goes down. The progress to the downside is not that much. There's no really big commitment. I mean, like, we don't even have a single close below the level of the support that is a progressive close. One might say, well, what about this close? What about this close? Well, they are not producing the new close, let's say, below the lows that were the lowest lows at that time. That's what we mean by the progressive closes. This is more of an attempt to follow through to the downside, and there is no commitment below the lows. So still bullish and still buying. This buying produces the rally, which ends with 2 bars of selling. We see this in the volume signature. And also, it corresponds to the initial bar where we saw initial selling. A drift, a new terminology that we've developed together with William in the tape reading lab classes. The drift has kind of like interesting characteristics. Supply is increasing, but not that much, and the price does not produce a big result to the downside, but still slight result. So it's almost like there is some selling, but it's not that aggressive. And only after that there is some kind of failure after the drift. Again, buying on the increased effort to push the price down and on the inability to create a lower low. This is a higher low. Climactic bar, diminishing spread, and then a big bar of buying. this bar has determined the timing of the price leaving the trading range. And obviously, we need to check out how supply is being observed first at the lower level multiple times, and then at the higher level. Because going through the trading range, we need to lift off the bottom. So supply needs to be observed there. And then we need to observe whatever supply comes at the top, at the point of the resistance. So here is this supply coming in, and then we're seeing on the second bar, the spread is diminishing relative to the first bar, and yet the volume signature is increasing. So emergence of the demand. Well, with this increase of the supply, we're always going to go into the testing action, and the test is a lower supply and a higher low. So a very positive test suggesting continuation. Then on the way up, there are quite a few bars where we see the increase of the supply. What is that? Profit taking. Why would we say that this is a profit taking? Well, first of all, this is an institutional signature because public cannot produce that type of signature. So therefore, but what is the result of that? What is the result of that increase of the increase in the effort? We don't have a big follow through to the downside. Only one bar, maybe two, that have some profit-taking supply, and then recovery. So that's why we would conclude that institutions such as taking profits, especially in Nasdaq, that since September 2nd exhibited more weakness relative to the value, and that is still suggestive of the continuation to the upside. Now, the next reaction is very interesting because we are seeing the extension of the downward swing, something similar to what we've had here. And that downward swing is much larger than all of these smaller reactions on the way up. So this acts as a change of behavior that suggests what? A potential change in the environment. From an uptrend, we are concluding that we're going to go into the trading range. And our first conclusion on the boundaries of the range is this. Just how Richard Wyckoff himself told us, right? So climactic action, automatic reaction, and then the next rally, secondary test. Now, this point here is very important for multiple reasons. The price is capable of overcoming the resistance and then have a staying above the resistance ability. So therefore, we would be thinking that this is a secondary test as an upthrust action. Upthrust action, obviously, from WTC1 material is a bullish action. So we would be seeking a confirmation throughout the whole trading range that the bias of this trading range is a reaccumulation, and this is very important right now, so please pay attention, to be confirmed or to fail. And this is a very, very important statement for us because throughout the whole trading range, we might see elements that we might perceive as a distribution. And as I recall, as we were going through this reaction, there were quite a few bearish sentiments that came from our students or just from outside of the company. And, it was really distracting, to go through this. But, and I think that in a way, I started thinking that maybe this is a potential bearish scenario somewhere here on this bar. So we'll talk about this in a second. But this was a really difficult reaction. I think to me personally, it was even more difficult than this one right here. Just because you really needed by that time to rebalance your portfolio where growth and value would have somewhat almost like an equal weight. And if you were overexposed in growth, specifically in technology stocks, and if you have a substantial portfolio, let's say in millions of dollars, then that rebalancing might take some time, especially if you're an institution. So it was kind of an interesting but somewhat difficult spot in the market. And then I was getting extremely bullish as on this rally on the way up, as we've seen quite a few buying bars and then an ease of movement type of bars where demand is actually diminishing, and yet the result to the upside is expanding. So that was a really great confirmation that we are done, that we're going to have a rally, and that rally most likely is going to retest first this level like it did here. So we use this as an analog. And I think that this bar right here, where we have this increase of the supply, acts exactly like this bar right here. So let me just highlight them, these two bars. And I think that I was kind of swayed a little bit by this sentiment at that moment. It's kind of funny how you remember the history of your calls or your trades through the prism of the chart, through specific bars, through the sentiment that comes to you, and so on and so forth. So I'm kind of laughing at myself a little bit here. Well, the key, after all, after this bar was attempts to go down. And what do we see on those attempts? Well, obviously, just diminished characteristics of the supply. That's number one. And secondly, diminished characteristics of the result, without the capacity to overcome this bar, which became kind of an important bar at that moment of time. And then after that, after the conditions were formed for the rally, that was a pretty easy call, to the upside. So we published that on Twitter, and with this bar acting as a confirmatory bar, we are in the rally. The next question for students became, well, how could we rally without the volume signature expanding? So the volume is diminishing. The next question, does it mean that demand is diminishing? Absolutely. Yes. If the volume signature is diminishing, both supply and demand are actually diminishing. And yet, look at the momentum of the price action. So how's that possible? Well, we've studied in the WTC1 the ice cream story. Remember that, guys? Right? So this is where supply is exhausted to the point where even on the diminished demand, the price is going up. And that's exactly what we have here. Okay, so now, where are we with this? A big momentum that identifies the value zone for us, where if we do have the reaction of the diminished momentum characteristics on the upside in the vicinity of the resistance cluster, then we would be expecting the price to test this level right here and then kind of like see whether we could come into this area. So this would be an idea for the continuation of a trading range, this trading range right here. Is it possible? Absolutely. Yeah. We probably would be talking about a range like this, A, B, and then potential C. That's a possibility. So that's one scenario. We could have a high low C as a last point of support. That's a possibility as well. We could also think about more of the downsloping structure like this, where maybe we are experiencing a sign of strength rally and then a backup. And one might say, well, like, aren't you an expert? Don't you know what's going to happen? I'm definitely an expert on the knowledge. I do not know what's going to happen. And if you do, please do tell me, because I want to know. If you know what's going to happen, I want to know. But if you're wrong, then don't come back to me again. That's just kind of like my statement on all of the people, for all of the people who think that, you know, they know what's going to happen next. You might know in the, you know, like in one instance, but, you know, you might not know in the, you know, collection of instances. So for us, the main thing is to develop the logic as to how we observe the chart, and then what kind of deductions do we make, and then how do we follow the truth of the chart. It's very important to me to see the truth of the chart as close to the truth as possible. And that's what we're doing in our classes. And specifically in this class, WTC2, it's all about how else could we deepen our visualization of Wyckoff concepts? How else could we develop the observational skills? How else could we be in the correct logic of the truth of the chart? Those are very, very important, you know, teaching concepts for me. So as we're seeing deterioration of the momentum, we do not see a big result as supply starts to come in. So this is a bullish side. But then right away, we kind of seeing that there is diminished result to the upside on the next bar, even more so on the bar after. And then we're seeing again supply is increasing relative to the demand signature. We still don't see a big result from the yesterday's bar, but today's bar was very interesting because the effort was on par with yesterday's effort to the downside. And yet look how this bar is expanding in spread relative to Monday's bar on the same effort. What does it tell us? There is some kind of ease of movement with which the price moves to the downside. So we will have to see whether we are going to have a more of a bullish scenario where the price might just kind of stop here, maybe consolidate and then continue to the upside, backing up action. Or maybe something more serious, maybe something within the construct of a much larger trading range, where we might have to retest, you know, this highs, this intermediate highs right here into 1/2 at least, or even go, you know, slightly lower. So we'll have to see. I don't know what's going to happen. I only can trade it. I cannot predict what's going to happen. All right. So what else? Let's quickly go through some other stuff. So gold. I think that, you know, Bruce and I, we've been following gold really well in the last. Well, actually, you know, there were some spots that were a little bit difficult, a little bit interesting, but you know, those were very kind of occasional spots. Everything else was somewhat frustratingly clear as the price is downsloping in the trading range formation. I think the key for us around this area right here, or you could increase this area right here, and this is what we've talked about in the last week and in the last months or so. The change in the texture, there is some kind of compactness about the way how this structure is unfolding. If we would compare it to this structure, you know, it's just a different look, a different volatility characteristics as well. So volatility, let's say in the first case, definitely increasing, whereas in the second case, we don't have that. There are some reactions that we're seeing, but characteristically, these reactions are showing either diminished supply character, and by the way, almost on all of them, we're seeing how supply is diminishing, or we're seeing, you know, small spreads to the downside that relative to the previous areas are definitely decreasing. And the biggest threatening bars to the downside cannot produce a very significant result. So the downward result was diminishing. So that was a somewhat pretty easy call around this area, especially. Look at this reaction right here. There's just no substantial result to the downside. It rests on the upper part of this range, and that's on the background of such diminished supply signature. The key bar for us to overcome here is this one. So this was the last breakdown. This is the most significant bar to overcome, and look where we are. We've attacked this level and we're staying above it. So currently we're going through the test of that attack on that level. And as we've said, in the last month or so, it's not only going to rally, gold and silver, but also we're probably going to rally and attack this resistance here like we've done before. And I think that in this case, we're going to actually overcome this resistance cluster. It's just there are more indications of overcoming this cluster than we've had here. Again, it's just all in the bullish construct of this local structure that suggests that there is more strength, and therefore if there is more strength, then there is more possibility to overcome this level. Plus, we're much, much closer to the resistance currently, than we were before, and that bullish strength probably will try to get us to maybe like 900, and any type of overcoming of this resistance is going to be really positive. Okay. Scott is asking, any suggestions for how to get exposure to this besides gold futures if one wanted to trade it? Yeah, check out, first of all, any ETFs, GLD, you could do this. Any type of related to gold or to metals groups, for instance, gold miners, GDX, check out that. Some individual stocks in gold and silver also are producing a lot of breakouts right now, so check those out as well. And what else? Yeah, probably those would be the main ones. Yeah. Okay, nothing interesting about oil, right? So we've had really great calls on oil. I think this was a fantastic call on this day with this bar. We identified this bar as a change of behavior type of bar, and it's very subtle. It's so subtle. It's like almost and kind of like invisible. But the idea here was that we are going to go into some kind of, because of the momentum that we have, we're going to go into some kind of structure, small distributional structure that will lead to a much more meaningful change of behavior that will lead to a trading range. And we said that on the way up in this distributional formation, we're going to have 3 pushes up with shortening of the thrust and deterioration. And here it is, 1, 2, 3. So here is where they are distributing on the way up. So this is a contrarian distribution. They are obviously taking profits here, just because there is a lot of profits already built in. Secondly, whatever their scenarios are in their models, just basically, they're being said that this is the level to take the profits. This is also a long-term resistance that extends from 2018 2019, I believe. All right, sorry guys, I had to stop here for a second. Okay, so then as they are taking profits on the way up, look at this spot. This was a confirmation of the distribution. Why? Well, they're not selling and they're not buying. So a drift leads to the momentum into the change of behavior reaction or automatic reaction, and that gives us the boundary for the trading range. So where are we right now with oil, just in general? We are in the trading range. Here it is. There is nothing to it. The most important bar is still this one on both sides. to overcome, to the upside or to the downside, doesn't really matter. So, and that's why, when we go in the trading ranges, it kind of becomes a little bit boring, but exciting at the same time, because of the short-term volatility. Okay, I think that's it for the market update. We're at 4 o'clock, so let's move on and do some other stuff. For those of you who are interested in this type of the analysis, and if you're a guest and not familiar with Wyckoff Analytics, check out Wyckoff Market Discussion. This class is conducted by Bruce Frazier and myself, and we usually conduct it on Wednesdays at 3 p.m. Pacific. And it's all about application of the Wyckoff method. I really enjoy my discussions with Bruce. Bruce is an immense talent. He has an immense experience as a market professional, and he brings so much to the table in terms of the history of the market, and also in terms of a deep understanding of the Wyckoff methodology and how we should be applying the Wyckoff method. We usually go, and the structure of the class is such that we go through the market analysis. This is for sure what we want to give you guys: two things: market analysis and then stock selections. We want you to know what the market is doing, and then we want you to give some kind of ideas about the groups and the stocks that are in harmony with the market or in the disharmony of the market. So check out this offering. Tomorrow we're going to have a free webinar session at the same 3 p.m. Pacific, so you are welcome to attend that. All right, so let's jump into something else. Let's jump into our first exercise, and we're going to do this together, so be prepared to write down your answers. What are the main issues for traders and students in the analysis? Well, the main issues, as I said before, are going to be your ability to correctly observe what's happening on the chart. And by that, I mean not only to observe, let's say, the price and volume action, but also to observe the sentiment of big hands and weak hands. And that's obviously a derivative of the observation. One might say that, okay, well, maybe this is on the deductions part, but I would say that this is still in the realm of the observation. So price, volume, duration as the time element, and then sentiment. And then the second thing that we need to do is to make correct deductions about what the market participants actually intend to do. And then obviously on the chart, we seek the confirmation of the intention. Does it materialize or not? And if it doesn't, then we're seeing something else. We're deducing something else. With those deductions, obviously, we want to understand what the bias, what the timing, and what the character of the next move is. And that's primarily what we do. That's primarily where we want to go with this. So under the observations, what is the most difficult, element of the observations? So I've been teaching for quite some time now. This is probably cycle 30 plus. I'll have to come back and figure it out. But what I've noticed from students and traders is that generally we lack observational skills. So let me give you an example. When you look at the chart, so let's say, I'm going to give you this chart. Doesn't really matter. Any chart. How many data points do you think this chart has? How many data points do you think this chart has? Just make a guess. I mean, obviously, the first thought that you might have is that each single bar is a data point. Is that correct? Right? So however many bars you're going to have here, this is going to be, a set of data points for you to observe. That's number one. But beyond that, I mean, there is so much more. right? So each bar will have an open, close, high, and low. And you could also look at the volume signature, and there is a set of, either binary, it's an up volume bar or a down volume bar, or the extension of the volume bar, and so on and so forth. Then you have at the bottom the relative strength. Relative strength relative to the specific market proxy with the moving average. And then you could, go into much more complex observations of specific points to specific points. So there are quite a few observations that we need to make. And usually it's kind of difficult to create good observation skills because you need to see a lot of data, a lot of information on the chart, and you have to have the capacity, to observe a lot of it almost at the same time. The second problem is that as we observe this data in a lot of ways, I see a lot of non-objective way of how we're observing this data. There is some kind of subjectivity, and it could be related to your past experiences in trading. And there is some kind of almost like this past transference, where let's say a bar that is going to have, I'm going to come back to this example, a bar that's going to have some kind of shakeout characteristics, almost undeniably will attract more of your attention than anything else. So it's almost like, I don't know, like some kind of, you go on the street and there is like a beautiful sport car, right? So that would always, turn my head, and I would like stare, and I would not see other cars around it. So that's what I'm talking in terms of, subjective ways of observing the chart and more objective ways. And, there are quite a few spots like this. I mean, like you could say, this is the spot here, this is the spot here. Usually it's going to be some kind of interesting price action. But then there is a lot of data in between of this, interesting spots. Okay. Next point here is that when we make observations, we, because in a lot of ways we're doing this in a subjective way, so something attracts our attention just because we have either, elements of pain associated with that, or elements of greed associated with that, or excitement, then we will concentrate on those, and we will not make sufficient number of observations about the chart. So our work here, as we progress into much deeper knowledge in this class than a WTC1, is to make sure that we observe a lot of data points, and we observe the data points in the most objective way. And there is no any type of emotional connection from the past to any specific bar. And we are extremely objective with our observations. Well, if we succeeded in that, that still does not give us a good result, because we will need to deduce correctly what does all of those observations mean. And usually traders and students interpret the observations incorrectly. And again, it comes from a lack of knowledge, that's number one. And secondly, it comes from inexperience. You have to train your eye. If you are in this class and you're taking WTC courses, this means that you're on the path of working with primary data. Primary data is price, volume, time, and sentiment. So you should train your eye to observe that type of data. And by the way, all of the technical analysis indicators, let's just say indicators at this point, not necessarily tools, but indicators, are based on the primary data. So when you observe an indicator, you still have to develop the same observational and deductive reasoning skills. And that incorrect interpretation of what you see could be based on different factors. You might not correctly systematize these observations into deductions. So, for instance, you might, probably one of the biggest mistakes in terms of systematization is looking at the lower time frame and making a decision based on that, and not considering a long-term or a high time frame, long-term trend, or a higher time frame picture. So this is just an example, but this is kind of like an example that happens over and over again, almost in each class. And then we need to understand what's the weight of evidence for a specific price action. What do we give maybe more weight to than something else? For instance, that shakeout in Bitcoin is a very important event. So we should definitely give more evidence, a weight of evidence to that price action, rather than something that came before and was maybe more of a minor marginal test to something else, right? So we need to make sure that when we observe and when we deduce, we concentrate on the specific important bars without any emotional attachment to those bars, and give them more weight, and then also give more weight to the overall picture when you collect all of the observations and when you collect all of the deductions. So there are quite a few obstacles in our way to become a better trader. And I'm sorry to go into such basics, but I think that if we nail the basics, we basically could go to much higher level problems in trading and address those once we feel comfortable with the basics and we have a really good basics foundation. So therefore, here's our first exercise. I'm giving you some data points on the left. It's 3 bars, 3 price bars, and 3 volume bars. I want you to make observations, and I want you, after that, to make some deductions. We're going to start with observations. And I want you first to give me as many observational points as you could collect from this chart as possible. So write it down, and I'll try to write it down after you. What do you guys see? What do you observe? And please note, I'm just giving you 3 bars only. Okay, declining spread. Well, declining spread on where? On which bar, Anthony? Right? Because we definitely have declining spread, let's say on the second bar relative to the first one, and then we have expanding spread relative to the second. So you see already how we could go into such complexity of what we're seeing. Okay, shortening of the thrust, and we're probably talking about bar number 2. So let's just put it this way: bar number 2, declining spread. Number 2, shortening of the thrust. Okay. What else? Supply capping the market. So there is definitely supply coming in. Okay. So again, bar number 2, supply is coming in. Okay. What else? Effort versus result in candle number 2. So this is more on the deduction part, right, Sam? So effort of bar number 2 is increasing. whereas the result to the upside on bar number 2 is decreasing. And what would it lead to, by the way? Some, obviously some kind of, more of the bearish look right here. Yeah, move low, correct. Fail of prices progress to the upside from Binhood. Okay, so we have that. Shortening of the thrust on the second bar and reverse on the third. So bar number 3, reversal of bar number 2. Okay. Okay, what else? Middle bar has a lot of supply that steps on the bar and prevents it from going higher. From Alexander, yes. Last bar has an ease of movement down, so we're seeing supply is going down and expansion of the downward result on bar number 3. Supply is going down plus downward result is increasing. I'm sorry. Okay, let me capture all of your comments here. Ease of movement on bar number 3 from Scott. Bar number 2, equal number of buyers and sellers from Alistair. Supply starts to take over from Hamid. Strong bull bar that was halted and partially covered from Neil. Strong bull bar that was halted and partially corrected. Okay, so now we're talking about bar number 1. So bar number 1, bullish, right? So this is what I'm hearing from this comment. Then in the context of bar number 1, we have 2 and 3 as a correction. Okay, and it's a partial correction. Okay, great. Thank you, Neil. Number 2, indecision from Scott. Raymond is saying number 2, increased effort, no upward progress. Correct. Ease of movement of numbers 3 from Modo. Okay, number 1, climactic bar. Okay. Climactic characteristics. And climactic characteristics are not necessarily going to be like, oh, climactic meaning distribution, right? If we have an up bar. Climactic more is going to mean stop in action. It could be an intermediate climax. It could be like a really intraday stop in action before we go off. Okay. Confirmation, number 2, effort versus without results, supply is present. Confirmation of supply, number 3, confirmation of supply is of movement to the downside from Wendy, really good. Steve, number 2, stops, upward move, 3 reverses, deep retracement for Hamid. Okay, so let's talk about the retracement. So this is number 3, retracement. So what could we observe about the retracement? 2 things. Where we have the close relative to bar number 1 and where we had the low relative to bar number 1, right? So retracement, close at 1/2 of bar number 1, low at probably maybe like what, 80%, right? 80% or like 20%. Yeah, let's approach it from different angle. Yeah, 20%. Yeah, really good comment there. What else? 3 penetrating below 50% of the bar number 1 from Jonah. Okay, so we just talked about this. Steve is saying 3 has not moved below the open of bar number 1. Okay, also in the same category right there. So open of bar number 1 is here. No closes below bar number 1 from Sam. Okay, so I would say that number 2 and 3 closes are still above number 1 close. Okay, what else? Number 3, strong demand tail from Alistair. Yeah, so we have this demand tail right here. Okay, so number 3, demand tail. Okay, bar 3 has demand tail and closes at above 1/2 of bar number 1 from Alexander. Really good. Demand tail on 3, demand tail on 3, demand tweak on 3, spread increase on number 1. Okay, number 1, spread increase. Third bar is a test. Okay, number 3 is a test of bar number 1. Okay, all right. Okay, great. So we made quite a lot of observations here, and I must say that this is not all of it. I mean, like, if we would really, really go into everything so methodically, we would be thinking about, let's say, the expansion of the effort with the expansion of the result on bar number 1, the ability, of the open and the low to interact with each other, the ability of the close and the high to interact with each other. Also, those are pieces of information, right? Then do the same with bar number 2. So relationship of the close and the high and the low to the close. Then relationship of bar number 2, as a lot of you mentioned, to bar number 1. The relationship of the result to the effort on bar number 2 that suggests the reaction. Then bar number 3, which acts as the test of the supply coming in, and then the relationship of bar number 3 to bar number 1, which you spend a lot of time on, guys, which is great. So what could we say? What kind of deductions could we expect? Right? So let's start with bar number 1. What kind of deductions could we make about bar number 1? Is this the most important bar on this chart, by the way? Okay, so all of you are saying yes. Bar number 1, most important bar on this chart. What kind of background does bar number 1 has? Is it bullish or bearish? Bullish. Okay. We don't have any references to the prior effort, right? So we can't really judge whether there is a lot of supply there or not. So we only could make this judgment just based on what we have on bar number 2. But even from these 3 bars, and just thinking about bar number 3 volume signature, I would say that probably the volume on bar number 1 is expanding. That would be my conclusion here. So volume is expanding on bar number 1. So therefore, if the volume is expanding and the spread is expanding, and we could see this again in the relationship to the spread at bar number 2 and number 3, we could say that effort on bar number 1 is expanding and result is expanding. So this is confirming the bullish bias. And you see how, through this type of observations and then through the deductions, we are thinking that the background is most definitely bullish as we come into the second and third bar. And every other deduction that we're going to make is going to be against bar number 1. Okay, so bar number 2, as we said, is going to have these characteristics, right? Increased effort to push the price up, and yet the upward result is diminishing. So what could we deduce from this? More effort to push the price up and inability to do so. Supply is present, and therefore we might have some kind of reaction. So there could be other things that we could discuss here. For instance, bar number 2, this spread of bar number 2 in the comparison to the spread of bar number one is definitely so much less. And yet, the effort of bar number two is slightly increasing over the effort of bar number one. So when we think about how the effort is almost the same or slightly above that, and yet there is no really big progress because the close of bar number two is somewhat equal to the close of bar number one. So then what kind of depth of the reaction we might potentially have? What do you guys think? So we have expanding effort and absolutely no progress, and the effort is almost the same and even slightly higher than on the bar that is expanding. So what kind of possible reaction we might have? Would it cover just the top of bar number one or more than, let's say, one half of the bar? I'm just giving you a little bit more time to think here because this is a very, very important question. And it's not just important in terms of realization, of what kind of reaction retracement we might have. It's more about developing the correct thinking about, and the logic as to how we analyze. And I see that some of you are saying, okay, I don't understand the question. So I'm going to rephrase this somehow because this is a very, very important point. So Sam is saying, kind of helping me out here. Increased supply could have a much more pronounced reaction. That is so correct. Right? So looking at the supply or effort at bar number two and looking at the result of bar number two, it just tells us that there is quite a significant supply. Imagine that the picture could be different, right? The picture could be same volume signature for bar number one, then let's say supply is still relatively high but diminishing, and then we have the same type of bars, right? Up bar, and then we have the same type of effort bar, result bar at bar number two, but supply is decreasing. Then the reaction is probably not going to be as deep. Right? Something like this, maybe, as a test. But in our case, this is different. Do you guys see this? Do you see how we literally can judge the market by its own action? We just have to know what to look at, how to look at that, and what kind of deductions to make from that. And usually that is kind of always hidden from us. And that's why, this my new expression is the truth of the chart. We need to see the truth of the chart, bar by bar, swing by swing, structure by structure, price cycle by price cycle, and then we'll definitely, will come to a much deeper understanding what might potentially happen and which shape and form it might take place. Okay, so the depth of the reaction is going to be, let's just put it this way. It's going to cover a lot of bar number one. Okay, so that's our main deduction here as we go into bar number three. Okay, and let me just read some of your other comments. Reaction possibly even more than bar number one if supply continues at this level. Yeah, if the supply on bar number three would be expanding, we would have a much, much deeper retracement, Steve. So good thought there. Okay, the form of the reaction suggests deep down move. Okay. can you say that the CO is selling here? Well, we would have to contextualize this. There is really a very limited context that I'm giving you, and this is on purpose because this exercise is not about thinking about the CO per se, but thinking about observations and deductions. If we would have more data, then we probably would make a better, we could have a better answer to this. Okay. If this plenty of supply makes us expect a pronounced reaction, bar number 3 got a more bullish sentiment as it looks on the chart from Alexander. Okay, Alexander, I think you got it. Yeah. So that's exactly why we're here. It's to go from, I don't understand the question, to this type of realization. So hopefully, Alexander, it's kind of like an aha moment there. So that's great. Okay, shall we call the bar number 2 a change of behavior from Hamid? Yeah, absolutely. We could definitely call it this way, with the understanding that usually the change of behavior would be referred to, something else in the structure, right? But we could say that there is definitely a change, at least a temporary change of behavior on bar number 2, and from a very bullish type of price volume action on bar number 1, we might go to a more bearish type of price action. Okay, all right. So bar number 3. So we have a bullish background on bar number 1. We've encountered supply on bar number 2, and we said that we're expecting a reaction that's going to cover probably the majority of bar number 1, just in the way of how much supply and how less result we have on bar number 2. So now let's look at bar number 3, and what could we say about what is the most important message for bar number 3 that we see relative now to the context of bar number 1 and number 2. So we are thinking about bar number 3 as a test to bar number 1. How's the test looking? Number 3 is of movement, but lower volume, so deduction is bullish from Michael. Supply is less on bar number 3, okay? So supply is less. Okay, what about the result? Hamid is saying close at middle of the bar but deep test, meaning some consolidation, not ready to move up. Okay, so but we are definitely closing 1/2 of bar number 1. And closing at 1/2 of bar number 1, is a good test. Wyckoff would say what, 50% retracement is possible, so that's fine. Inability to commit below the low of number 1 from Scott. Yeah, absolutely. So I'm going to put it here under the observation. So number 3, no commitment below bar number 1. Reaction is not as deep as expected. So bullish. We have a demand tail. Bullish. Close at 1/2 of bar number 1. Bullish test from Alexander. Aha. Here's that aha moment, Alexander, right? Really good progress today with that. Okay. We've noticed saying number 3 cannot go more than half of one bar number 1 down. Okay, great. Some buying coming in. So we see in the demand tail that there was some buying. And this is a very important concept because when we take the construct of the volume bar for bar number 3, and we have a demand tail here on bar number 3, we are assuming that demand is increasing. Now think about this. If demand is increasing, then the rest of the bar might be supply. So what is supply doing? Supply might be actually diminishing on bar number 3. Bullish or bearish? Definitely bullish. Okay. Much less supply is bullish too, Alexander is saying. Yes, absolutely. Okay. Supply is exhausted. All right, great. So from all of this, from all of the observations that we've made about the bars first, whether those are price bars or volume bars, and then going into the deduction of what it actually means in the specific case, for the specific bar, and then in the relationship to other bars that have created what we call a Wyckoff story, what we would be thinking that there is a definition of the background, there is a definition of bar by bar intentionality of what needs to happen, and then some kind of confirmatory characteristics, whether on the price or volume side, where there is an expectation of the specific thing happening, and then confirmation, specifically on bar number 3, as to are we still in the bullish background? Was it reversed, or are we still bullish? And what would be your conclusion, guys? I mean, like, going through this exercise, what is the next most probable move here out of these 3 bars? Move up. We expect a rally, up, bullish, retest of the high, attempt to rally. Absolutely. All of those things. So hopefully, you could see from this exercise how deeply we might think about observations and deductions, and how necessary it is for us to do exactly that. Now, the problem, and I was discussing this with, I think it was Franz today. The problem is that we don't have just 3 bars on the chart. We have this. So how about doing this exercise now with the data that I'm giving you now? And for those of you who are not familiar, I just want to point this out. This is E-mini's futures on NQ, Nasdaq 100. So what would be your main observations here? And how about this? Why don't we reframe this into something else? Give me your only one main idea that you see on the observation side. Sam is saying a downtrend. Really great. Okay, right away we're establishing a background. Okay, what else? Give me something else rather than downtrend. We had distribution range. Okay. Yes, we had a range where the price was trying to go up and then it went down. So distribution range. Okay, what else? Increasing the volume signature. Okay, well, this is futures, so this is the Asian and European sessions, and this is the US session. So that's why. Huge supply coming. Okay, specifically where do we see supply? We're seeing supply very clearly in this spot. We're seeing supply very clearly in this spot right here. Okay, so what else? So supply is increasing. Okay, lower highs and lower lows, definition of the downtrend. Widespread on the way down, increased weakness. So downward spread is increasing. Okay. Shortening of the downward thrust. Yeah, this is important here. Okay. Just locally important. Scott is saying capitulation. So yeah, there is some elements of capitulation. So we're gonna say that okay, shortening of the thrust, local, selling climax. Okay, big overhead supply, big bearish cores from Neil. Yes. Okay. Recent change of behavior. I'm looking for the trading range. So this acts as a change of behavior. Okay. Diminishing supply at the bottom. Okay, from Iqbal. Absolutely. Okay. Increased volatility and spread. Classic selling climax and automatic rally. Stop in action, sign of weakness with LPSY. Okay. Yeah. Okay, good. So could you make a deduction from these main observations as to what potentially could happen next? Modo is saying, okay, trading range. Secondary test, Anthony is saying. We retest the lows. Okay, so testing from Alexander. Change of character from Scott, which basically is an idea of a trading range. Test of the last downswing, which again, is going to be an idea of the testing and the trading range. Okay, so what else? Trading range to be confirmed or to fail from Scott. Absorption, and this is more going to be a local absorption, which is suggestive of what? Some kind of rally, which is also local. Within the context of what? Within the context of the potential trading range, which is going to develop. Okay, slope in trading range. That's a very interesting thought. Majed, and I'm sorry if I'm mispronouncing your name. So why would you think that it will be a slope in trading range? Just very curious. Different trading scenarios, possible trading range, or could continue off the downtrend. I like that. Supply decreasing along with the shortening of thrust, indicating possible reversal of the downtrend. Yeah, I would say that all of this will leading us to kind of the same assumptions. I mean, all of the deductions are basically saying like we are in the downtrend. This is the background. We're probably going to go into some kind of trading range. I would say that this rally most likely will continue still up to which point? Well, where was the active breakdown, active supply? So probably this. So we would define the trading range, the height of the trading range as, the difference between the boundaries of the resistance and the support. And then this is going to be a very important level for us. This is our selling zone. This is the last capitulation with the breakdown characteristics, where supply was extremely active. So therefore, any time a rally comes to this level, we're going to be questioning the strength or the weakness of this rally. And then we're going to make some kind of judgment as to what's going to happen around this spot. Would we develop more of the trading range, or would we overcome it at least temporarily in some kind of upthrust manner, which would suggest at least an element of strength? So we would have to see this. Now, the next question, once we've come up with our deductions here, is how do we actually trade this? What would be our strategy, guys? What would you say we have to do? Wait for phase C or D? Okay, well, let's just say that this is intraday, right? So this is 1 minute. Although, don't fixate on that. Don't fixate on the time frame here. What we are studying here is observations and deductions. So the asset time frame does not matter at this point. Okay, looking for diminished volume signatures and then a sign of strength bar. Wait for the point of entry in the trading range, wait for the first test, wait for phase C, possible spring, we need to test the supply, trading range between ice and creek, wait for the test to confirm, then take a small position, look for a spring, covering of the short first, then waiting for the clear bias of the coming trading range, trade on confirmation. Okay, I'm still waiting for the correct answer here. Okay. Okay, fronts. Good answer. Swing to the resistance. Trade range boundaries from Jonah. Identify and update our bias throughout the trading range from Steve, which is just more analytical way of thinking about this, but also a very important thought. Okay, well, I would say that if we are going to be in the trading range, and if let's say you're trading this market, then you have to trade it like this, like this, like this, like this, like this, like this. And then around the spots that are, as I said, are going to be important spots for us around the resistance and around the support, we need to observe what's going on there. But if we're in the trading range, our only possible tactic is going to be to trade a trading range. So, and let's do exactly that. Let's buy here. Let's sell here if the signs are correct. Let's buy here again if the signs are correct. And let's sell here if the signs are correct. And let's have two positions. One is based on the conditions of this trade, and then the second one, which is based on the confirmation. So let's see. All right. Big Note is saying we need to identify if this is a reaccumulation or a distribution. Well, until the trading range develops, as it develops, we could definitely do that. But in the moment as the trading range develops, we're still trading it, right? So we were somewhere here. So let's just say that this is a confirmation actually. So here's our first buy. We are coming into, again, these two bars are extremely important. And this is, by the way, today's session. So what do we see around this area right here? How would we describe this? How would we make an observation about this? Shortening of the thrust. What else? Diminishing demand. Okay, not necessarily, well, supply as well, but we have some supply here, which is hidden. But yeah, exhaustion, tighter spread, diminishing spread, unable to commit above significant bars in the high volume bar. Okay, small spread into the resistance, no commitment to overcome, weak rally. So those are conditions that we're seeing developing for a potential reversal that would act as a confirmation for us. And we said that we want two trades, right? One is based on the conditions. So specifically, we are going to be discussing the trade into the last pushes of the rally. So that's entry number one. And then confirmatory signs are going to be around this bar right here. Here's our second point of entry. So here's our trade number one. Our second trade is going to be developing around support. So let's look beyond this smaller redistributional structure, and let's look at how the breakout is happening. Really nice, clean breakout, lots of volume signature. What happens next on the next leg down? What do you see? Shortening of the thrust, correct? What else? Diminishing supply, correct. Doesn't trade to the support level, bullish, yes. So high or low. Decline in supply, yes. Okay, so reversal in a good test. Decreasing effort and decreasing result, correct. Less result, correct. So we would be thinking of establishing the position right here, number one, and then on the confirmatory bar, number two. So here's our trade. Okay, as we increase the momentum here, what do we see on the next rally? Describe it to me. Make your observations. Shortening of the thrust, correct. What else? Decreasing spread, not increasing. This was increasing spread. After that, everything is decreasing. Supply tails. Okay. Lower high, correct. Volume is shrinking, correct. So demand is going down, therefore. Ranging at the top, loss of momentum. Okay, all of this correct. So we probably would be thinking of potential buying climax on this bar right here. I don't know if you could see this. And then the upthrust action right here. So selling into this is number one. And then confirmatory bar is somewhere here, number two. Here's our trade. Okay, going down, we would be thinking about this price action kind of the same way as we've done before. So another high or low, I'm just going to go really quickly. Diminishing supply character, shortening of the thrust, and so on and so forth. So kind of reminiscent of what we've had here. So here is our conditional trade. Here's our confirmatory trade. Number two, number one. And by the way, this is very interesting. Here, from this high low, not from this one, but from this high low, we would be expecting a better rally than what we've had before, just because we are stopping a little bit earlier here. And look how it materializes. So it shows that strength. Depending on the stop losses, we're not going to discuss it, for the sake of this discussion. But you could definitely see a lot of effort versus result type of things here. And it all depends on the trader, how you're going to go through this. Again, we just don't have time for this. So our points of entry also could be this confirmatory bar. So number three. And then a small reaccumulation, climactic bar, diminishing characteristics, downslope in structure, and then this bar right here shows the second point of excitement and then a failure. So this failure would act as point of entry number two, and this upthrust bar would act as a point of entry number one. So it's just a downslope in structure after the climactic action would work out like this. So here's our trade, and then so on and so forth. So look what we've done. And how was it possible that we actually done this way, right? And obviously, one might say, okay, well, you see in the picture what has happened. But we didn't really discuss this picture on the previous slide. What we've discussed is preconditions to what is going to come next. We've defined what kind of structure we could have. That's number one. And then we've defined what kind of tactics, trading tactics, that is, we're going to use. So we're going to oscillate our trades at resistance and support. And that's the whole idea. Michael is asking, as an academic exercise, I love it, but realistically, would you do this trade? Well, Michael, yeah, of course. I mean, like, why would we not do this trade? Why not? I mean, like, what's stopping you? Oh, and what's kind of like the reason of asking this question? I mean, do we realistically would do this trade as an intraday trader? Yeah, we would have to. If we're 100% there trading this market, and this is what the market is given to us, and we are, able to identify the change of environment, we could change the tactics and we could trade it like this. You don't have to. You don't have to. You could wait for more directionality of the market and you could use that. So for instance, I don't necessarily trade the trading ranges. I mean, the market presents so many opportunities to do directional trades that there is really nothing, that we need to do in the trading range per se, unless it has a lot of height. But if you're an intraday trader and this is your bread and butter, then you kind of have to. You kind of have to understand this and do this. All right. Let's switch to something else. We're at 5 o'clock. And hopefully, and I could have given you a different trade here, Michael, by the way, right? I was thinking about like what to give you for this exercise. In the previous cycle, I've given a directional trade, so that was probably much easier, right? But today, I just wanted to use today's day, and that's what it was. Okay, Michael is saying, okay, so he does intraday and looked at the percent return and don't know if it makes sense with the Wyckoff payoff. I probably would counter argue this because, I mean, on any given day, I mean, obviously the best trade is going to be the directional trade. But let's say, if we understand what's going on here, so let's say 13,750, let's say coming out at 800, so that's 50 points about. So we're making 50 times 2 times 3 times 4 times 5, so that's 250 points. Plus, if you are able, let's say, to catch this direction, you should be able to catch this upthrust relative to the previous structure. Let's say failure here, and then shortening of the thrust here. So your exit is probably on this bar. So realistically, maybe like 13, let's say 13,750. And then let's say more realistically entry here, just thinking about beginners, intermediate traders. So maybe what, 13,850. Okay, so that's plus 100 points. So we're collecting plus 750. So Michael, what do you think about that for a day? Alistair is asking a very interesting question. How could the big drop at 1300 be foretold? Well, again, the key was here an inability each time of the rallies to overcome it. And then obviously the upthrust action and then the failure of that. So that's the only way how I could think about it. Right? Okay, so Michael is saying yes, it makes sense. Okay. I was thinking about one trade. Okay, got it. Okay, so Scott is asking, do you know people who actually do this consistently? There are people who do this consistently, but not necessarily like each day, right? So each day could be different. Sometimes you have consistency, sometimes you don't. You guys are asking wrong questions because the key here about this discussion is not about whether you're going to do this or not. You choose as a trader what you do. It's your prerogative. For us, this discussion is more about, how to observe, what kind of deductions to make, and what kind of trading strategies to apply. And whether you choose to trade it or not choose to trade it, that's up to you. All right. Okay, let's go to another topic. Let's talk about the bias game. So one of the things that I'm going to ask you as students in this class is to keep the score of your bias game solutions. It's kind of going to be very indicative of where you are with your analysis. And at the same time, as I was observing or watched the students in the previous cycles where we started keeping the score for the bias games, I quickly realized that even for myself, a very intense analytical exercise where you have to deduce what the bias is could not be necessarily a reflection of, or let me rephrase this, or more accurate reflection of how you're going to behave in the marketplace. And this could be an argument for being lazy and not doing the work. And you guys who know me, you know how much I hate people who come to me and say that practice is a BS. I just don't understand this type of thing. You know, if I would, and I love NBA so much, if I would be a coach of, let's say, Golden State Warriors, uh, my local team here, a beloved local team, go Warriors. And I would come to Steph Curry and I would say, like, listen, all of this practicing of 3-point shooting during the practice time is all nonsense. Why? Because you don't have enough emotions invested in your shooting while you practice. And you should only practice your 3-point shooting during the actual game. What do you think would happen with Steph Curry if he would only practice during the actual games? I mean, does that make sense? Steph probably is going to say, like, Coach, are you on drugs or something? I mean, because this is not how it happens. Even though he practices, and like in practice just recently, um, he made 105 3-point shots from the same place, which is unbelievable. And you might say, like, there was no pressure, there was no defender, it was a practice, like, and so on and so forth. Well, don't underestimate the emotionality of the practice as well. That's number one. But also the mechanics. We're working on the mechanics. It's like him, you know, he's going into the form, shooting form, 105 times in a row, and he's making the shot. So every time he has to do it with the correct shooting form. That's what we're doing here as well. We are practicing for the purpose of the mechanics of trading becoming so seamless to us that in the actual moment of trading, we don't have to think about this. We automatically execute on that. What we would be thinking more about is how our mental landscape is distracting or sabotaging us from the correct execution. But at least one thing you will not think about if you've been practicing, and that is just the actual mechanics of trading, something that we just went on the previous chart. So it's really, really, really important to practice. And if you are watching this recording and you're saying, like, oh, this is all BS, don't come to my class. You know, this is a serious statement. And you don't have to comment about this either. Just go and do it like like a teenager would say, you do you. There is no reason to even produce any commentary about what other people's do. You do it the way how you want to do it. Meanwhile, we in this class, we're going to practice. We're going to practice with the bias games. So let me just ask you one question on bias game number 92. And obviously you guys already probably have seen the solution. So this is exactly how I'm going to be asking you in the classroom. Let's do this as a flashcard. What is the main observation and deductions that you can make about this chart? Just one. An uptrend. Okay, great. So higher highs, higher lows. Okay, what else? Sign of strength with high volume at the beginning of the chart. Okay, so sign of strength. By the way, this is also a sign of strength. This is a minor sign of strength relative to this resistance. Okay, what else? Buying climax. I don't think that we could make any deductions on that from that. Volume signature looks like classic uptrend. Meaning what? Meaning probably that we see some diminished supply characteristics here. Okay. What else? Decreased supply on the reaction. Okay. Well, we could definitely have some kind of, I'm thinking some kind of argument could come from here, but this is the highest supply into the climactic action. So let's just say not a sign of strength, but climactic action. And then we see how supply is diminishing. This is also climactic, last bar, last column. Okay, so low volume throughout triangle consolidation. Okay, so volume is going down. Effort versus result on the test. Yes. So this would act as a test. Test to what? Test to this low. Rapid recovery after each reaction, especially the last one. So some kind of change of behavior. Okay. Testing previous trading range in phase C, potentially. Yes, potentially in phase C. Okay. All right. So from all of these observations, what is the potential deduction that we could make? Upslope in trading range. Yeah. What is the main deduction that we could make about the bias? Bullish, bullish, bullish. Yeah. So this is how quickly we could solve this this bias game. Obviously, we are doing this collectively, right? So you guys are making a lot of observations, and then I'm kind of like picking up, okay, this observation, and so on and so forth. But you should be able and be at the level where you could make all of those observations by yourself. And this is what we are doing in this class. You know, again, building on the knowledge of WTC1, developing the skills for, during the WTC2. Okay, well, let's see what else would be important to us. So something that maybe was not necessarily mentioned. Look at the character of the reactions. And I think that there was a comment here from Michael. Not that familiar with the PNF. Well, PNF could be very simple and could be very complicated. So a simplistic way of thinking about this is columns of O's means that the price is declining, columns of X's means that the price is going up. And also, think that this is a representation of the vertical chart, but only from the perspective of volatility. So if on the vertical chart in a single bar we had a lot of volatility, we might have multiple columns in the PNF. So looking at these two reactions, what could you say about the character of the second reaction? Is it more bullish or more bearish? more bullish. Why is it more bullish? More laborious, right? So we have kind of like this laborious way down, shortening of the thrust on the way down. And the last one is the climactic action, was the highest volume signature. So demand is coming in here. Okay. Okay, so what else? How about the extension of the upthrust here, which acts as a minus sign of strength? Significant or insignificant? What if we would have something like this, just one column and then the break? Here, look at how many columns above we are going up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Definitely significant, right? So what it shows an ability of the price to hold above and spending some time there. So there is somewhat of a buying that we see above 60. Progressive closes higher. Yeah, we can't really say from the PNF that there is progressive closes up. Okay, so what else? How about something at the bottom? Like if we have a reaction, how quickly do we recover? And I think someone mentioned this, so I want to give credit to this. So here is a recovery bar column. Here is a recovery column, and here is a recovery column here. So we are off the lowest low. The recovery actually is a little bit more here. So this is probably suggestive out of the higher low that we're probably gonna try to break this level again. So at least a swing trade is possible there, and directionally we still, gonna be positioned to the upside. All right. Well, let's look at the solution. So this is in phase, and you could go through the flashcards yourself. There is also, this whole idea about a shakeout selling climax here with the highest volume signature, then the highest demand signature on column number 2, and then column number 3 as the test. So it's almost like slightly reminiscent of our previous exercise with 3 bars, right? So we're seeing how supply is diminishing, confirming the testing action of column number 3. What else was important? So this is from work from students that are taking this class again. So we have quite a few alumni who are taking this class again. Why? Well, why do you guys take this class again? Tell me. I mean, like, what is the purpose for you of being in this class? I'm asking the alumni. Should I tell Franz that you're taking this for the 7th time? I don't know. Maybe I shouldn't. Sam is saying, to get even better, there is so much to learn. I need the repetition, never stop learning. Spontaneity of excellence from Iqbal. Yeah, absolutely. Francis saying, never stop learning. Yeah, so evergreen analysis, yeah. Scott is saying 105 free throws. Yeah, absolutely, of 3-pointers. That's what we do. There's nothing else to do, just to improve your level of skill. So Sam is indicating to us this column. And that was very interesting. When I was creating this bias game, I actually missed that. I did not see that. So Sam, thank you so much for putting our attention on this. This is the highest volume signature on this chart. So it's very important demand signature that we're seeing. And obviously, when we have this demand signature, we want to identify the value zone, which Sam is defining here. And look at how, in the first case, the test comes kind of deep or deeply, retraces deeply into this column of axis. And then the second test doesn't even touch it. Bullish or bearish. A single idea could define the bias for you like this, which is amazing. You just have to know what to look for and how to correctly deduce, what is happening here. Obviously, this is all based on the body of knowledge that you have to know. This comes from Shorley, and this is also very beautiful because we've talked about this, right? What is the character of the reactions? Even on the PNF, you could see the distinct difference, how reactions develop. The first one is very aggressive, very sharp column down. Continuation was this aggressiveness. Continuation was the aggressiveness even more. And then we have a change of behavior for columns of O's, or the reactions in this area right here, which is suggestive of the rally. Here, aggressive, less aggressive, less aggressive, less aggressive, aggressive into the climactic action, which basically tells us the story about the presence of the supply. So there is not that much aggression, maybe only off the top. That's it. That is also a big difference. At least at the minimum, it would suggest some kind of swing up from here. And then you can think about the long-term directionality. Okay, so Shirley is continuing here, and this is very interesting. So Shirley has given me this part of the chart. And there is a count here of 40 columns. So I took this on faith, Shirley, that this is 40 columns. It's a traditional 3-box reversal, so we have 120 counts. But I would actually extend this count a little bit more. So I've added my own structure, continuation of this structure, which I did not include in the bias game. But if you're taking the PNF count, I would assume that you would actually look into that. So what do we see here? So 40 columns, and this was 23 columns. I'm counting this column as well. So 63 columns. The maximum count is going to be taken from this line right here. For those of you who don't know anything about the horizontal count method, you could first go to our YouTube channel. Bruce has 2 marvelous 30-minute videos as an introductory videos on that. That's number one. Secondly, you could, take on demand courses that we have. We have 3 of those that I've conducted together with Bruce. And then after that, just don't worry about the counting. For now, just kind of like follow my thought here. So 63 columns times 3 box reversal. And on the count line of 66, that brings us to 255. The minimum count we would take from the lowest count line, which is $22. So big difference here. Here's this $22. 211 as the target. 1/2 point of maximum and minimum is going to be $233. The price went up to $230 before having a meaningful change of behavior. So that was the correct count. It was a little bit challenging because we have an upsloping structure here. So usually we would have more of the horizontal structure, right? So something like this. Then the count would make sense. But here we have this upsloping structure. And I would make an argument that this is an actual phase C. I would also make an argument, and here is this chart right here on the right. So we were taking this count right here. But point number 6 is probably the true phase C. So the count should be extended like this. And then this was the high here. I don't have the numbers here, but 230 was the high. So that's number one. Secondly, as I was preparing for this, I was thinking about this structure. There was so much thought about shortening of the upward thrust in Bitcoin just recently. And I'm not saying that we might not develop, something of a different bullish structure, let's say something like this, or even deeper, or maybe this is a complete distribution and then I will be completely wrong on this. But it kind of pointed my attention to the shortening of the thrust here in phase in the structure. So shortening of the thrust here did not lead to a distribution. So do not be subjected to a maturistic looks and statements about something that looks very obvious, but in reality, it's not. Shortening of the thrust from 1 to 3 to 5 leads to an attempt to shake out at 6, and then a quick recovery after that. Bitcoin, same thing, shortening of the thrust from 1 to 3 to 5. If we look only at the closes, and if under this condition, if we recover here, then we might continue from here. But we need a good test, we need a good confirmation, and we need a continuation of the rally from here. Otherwise, we could fail here. But this is an example of probably why not to make obvious statements, because obvious statements could be wrong. And I'm kind of holding my tongue here. I'm trying to be very nice and polite and very PC about this whole thing. Okay, 527. Here's your next bias game. This is the bias game 93. This will be posted tomorrow for you guys. I'm posting it today. And as usual in this class, I want to ask you, what do you think the bias is? Accumulation or a distribution? I'm going to give you 20 seconds to think about this. So I would concentrate on maybe like one idea there, maybe two, maybe three at the maximum. You just don't have a lot of time. And then write it down. Alexander is asking, is the last bar's close lower than the open? Yes, that's correct. Open, close. So we're closing into the low of that bar. Okay, so, and I'm kind of seeing where you guys are going with this, so that's great. Whatever you think at this point, whatever you wrote is only your first impression. What we've learned in the previous cycles of the WTC2 course is that the first impression is usually based on kind of like your quick look, which is gonna bring the associations from the past. So whatever answer you are given, this is what you would do with your trading currently if you were to look at the stock and you are going to produce a very quick identification of the bias, like up or down. So now, as a homework, and before looking at the solution, which is going to come out on Friday on Twitter, I want you to sit down, print it out, and start making observations first, as we've done with the previous exercises, and then start making deductions, and then come up with the bias. And then when you're going to come back to the class, we're going to discuss this. That's number one. And secondly, I'm going to start giving you the algorithms as to how to deal with the bias analysis of the trading range. What are going to be, we're going to have two systems there, a flashcard, and also we have a specific algorithm. So I'm going to give you that, and we'll just, from that point on, we're going to make our analysis of any trading ranges just based on those two techniques. All right? Okay. So what else is left? We are at 5:30. Let's see what else. Okay, bias gain. So you could find it on our website. By the way, somebody was commenting that you can't find games between 70 and 90. Yeah, we just have to upload them. There's just too much work. But you could definitely find them on Twitter, which is not good because you're going to see the solution. So usually on Twitter, our handle is at Wyckoff Analysis. We're going to post the assignment slide on Wednesday. Then through Wednesday, Thursday, early Friday, we're going to collect the data on voting by the Twitter community. And then on Friday, we're going to give you a solution. So with that, if you scroll down, you're probably going to see the solution first. So yeah, play the games on our website. This is better. So click on this, print it out, and then, you could look at the communal votes. Those are not necessarily going to be correct votes. So you really, really have to, do this on your own. And then only after you come up with your solution, then go and figure out whether you were correct or wrong. And after that, just, I'll give you all of the ways of how to actually use this as a learning tool on your own in session number 2. So we'll have a very big discussion on that. But for now, just do the bias game number 93. Okay, and I think that we are going to stop here. We're not going to go into the anatomy of the trade. There's no reason to do so. Okay, any questions, guys, especially from those of you who are guests for this session? Because for those of you who already signed up or you're planning to sign up, you kind of already know what's ahead of you. A lot of work, and a lot of kind of like this question answer feedback, a lot of exercises, a lot of deep thinking about the markets, deep thinking about how we trade in those, and developing observational skills, developing logic behind how we analyze. So that's what ahead of you. So anything else? Any questions, remarks, comments? Scott is saying, so looking forward to it. Absolutely. Yeah, it's always exciting to start the new cycle, get the new people in and see where you are. Start practicing. Start practicing. We have nothing else to do. All right. With that, and I'm seeing some remarks. I'm not going to read them, but yeah, I'm also glad that you guys are here. I'm looking forward to working with you, and let's just get it done. Nothing else to do for us. All right, guys, until next Tuesday, you have your homework. And if you a graduate of the WTC1 course and you want to sign up, go to the website, sign up. If you have any questions, email us at wyckoff@gmail.com. Ask Nancy any administrative questions. If you're new to our work and you like it and you want to start working on your skills, on your knowledge, start with WTC1, check this out. And just email us and let us know that you want to be a student in our program. With that, thank you so much, and I'll talk to you next Tuesday. Bye-bye.